Well, Nilesh Shah of Envision Capital did an exclusive interaction with ET Now, needs no introduction, one of the well-known market participants here in India. And when we asked him about, really what's happening as far as markets is concerned, the recent rally, what really he makes of the recent rally, he very clearly said that higher retail participation, higher liquidity, which is there globally, as well as a returning to normalcy, which the markets are now pricing in, is slightly faster than what the street had earlier anticipated. And that's why the rally has been much sharper than what most of the people have been thinking, and especially when you compare it from the March lows. However, talking about Q1 numbers, results, the economic slowdown that we are seeing, he said that FY21 itself will be an exceptional year in terms of earnings. It is a number which will be completely wash out a decline on a PBT PAT basis all across the board as far as any sector, any industry, any company is concerned. But what he is also advising and suggesting is that investors will actually look at FY22 numbers, because that is expected to be a normalized number that is expected to show the full potential of any sector or any company. Q1 specifically, the numbers which will just start to come in now, is something which he says will be a complete whitewash. There was a lockdown in the month of April all across India. Even globally, markets were not doing that well. There was a lockdown which was extended into May, and that will have a significant economic shock as far as some select sectors and companies are concerned. Not only that, even on a YOY basis, all the sectors are expected to do on the lower side. Now, in the banking and financial space, he says it's interesting because banking and financial stocks have done pretty well from the March lows, but at the same time, you have a moratorium which is going on, and that's why the true color of the asset quality or the trend in the asset quality will only come in post Q2 numbers are out, or probably towards the December quarter, and that is something which investors need to be careful about, is what he's saying. The sort of asset quality trends that come in, the real asset quality trends may only emerge in December. Before that, you may have a lot of companies, large cap financial names actually coming out and raising funds so that they are already preparing for their credit cost or any sort of contingency if there is, even for the larger ones. So that's a trend definitely to watch out for. Recently, PSUs, not the banks, the other public sector enterprises have done very, very well. Nilesh Shah is one of the few ones who have always looked at PSUs. However, he doesn't own a lot of them, but still looking at a lot of PSUs, he says that PSU stocks now have become an event-driven stock. However, the recent volumes and price action is pretty high on these names, but he says that event-driven is something which will keep driving these stocks. So whether it's a privatization news, whether it's a news around high dividend, whether it's a news around change around the management, all of these things will keep the stocks pretty heavy. But again, taking a view on the PSU pack from a mid to long-term perspective, because it's been event-driven, is something which is difficult at this point of time. IT and pharma, according to him, will be resilient in this market. Remember, they are mainly export-driven, and he believes that IT as a sector will actually see enhanced demand as people are doing work from home, people are adapting to digitization much faster, which means IT spends globally can also increase.